We often get asked here at Levesque Wealth Planning, what's the difference between term insurance and permanent insurance? Well, one would be like renting your apartment or owning a house, leasing a car versus owning a car. The thing with term insurance is that it's fantastic when you need a lot of coverage and you don't have a lot of money, or you need a lot of coverage or any coverage, but you don't need it forever. Because there are situations Canadians find themselves in when they have a mortgage and they decide they want to go for a term policy just to cover the mortgage in case something should happen to them. Then term insurance is excellent, but it's also good for young families where they need a lot of coverage because the breadwinner, if they should die prematurely, they don't want to leave their family in a financial situation, so they want to get a lot of insurance, and it's affordable. But what happens with term, it becomes very, very, very pricey depending on the renewal and the age. And then again, if your health is deteriorating, you have no choice but to continue with that plan that's going up very high because no other insurance company may want to give you coverage. Unlike a permanent policy, what happens is you buy the insurance and your premiums never go up. Well, the problem with that is when you're young and you don't have a lot of money, you may feel it's not worth it because you need this money to support your family. But you have to be looking at the bigger picture, because if you have a permanent need for insurance, you need to have permanent coverage. And you want to know that those guarantees of never going up, regardless of what your health is going to be in place for your family. Now, what you can do a lot of times is you combine your permanent policy with term. And while you have the need for more insurance, you have the term rider, could be 20 years, 10 years, whatever you need it for. And when that comes due before the renewal, if you're healthy and you still need coverage, you can get a new term, which will come in cheaper, or you just let it lapse and you don't renew the term part. But you always know that regardless of what your state of health is, you have a permanent coverage policy. And it's really important to discuss these options with your financial advisor before you make a decision. Because what's happened over the years is that the years advance and it becomes very expensive to continue a term. But if you have a need for life and you're getting older, at the age of 85 and in some cases 75, your term policy is no longer valid. It runs out. That's it. And all the money that you've paid into is gone. Unlike the permanent policy, if you die, especially dying at a ripe old age, because you've been paying these same premiums, your estate tends to benefit from all the money that you've put in and then some. Where this wouldn't work, and unfortunately we don't have crystal balls to know whether or not you're going to die young or die in much later in life. Because if you knew you were going to die young, it's better to be with the term policy and save yourself the money, because then the difference that you would be saving, you can actually invest on a month-to-month basis. But since we don't know how long we're going to live, we have to assume we're going to live long. And that means permanent insurance has a permanent place, or should, in your financial plan. But again, you must discuss it with your financial advisor. What's right for you in the situation and what you need the insurance for. Because not everybody has a permanent need. And so if you have a term need, you go with term. If you have a permanent need, you must consider the permanent. This is Linda Levesque from Levesque Wealth Planning, signing off for today. and bidding you a great day.